Charlie Gasparino was following very closely the market impact of all of this, which appears, Charlie, at this point to be minimal.
Muted,
right?
Very muted. I think if you pull up a chart from December 22nd, I believe it is, to now, a stock chart, S&P or Dow, and it might be, if you can get that, it would be worthwhile here. You'll see that the markets have essentially flatlined, right? Yeah, there we go. Look at that's year to date. But if you look at December, yeah, there we go. A little easier. It's essentially a flat line, and the reason why is because the S&P is even more pronounced as a flat line. The reason why is because the markets are taking into account two outside influences, and I don't think it's interest rates. I think number one is trade. I think they're worried about Trump starting a trade war because of his rhetoric, and that having a really bad impact on GDP and earnings growth of major companies. The other thing is the political risk of what Mueller may come up with and what's going on. And I think all that is kind of factored into the fact that since December 22nd, when they passed the tax cut, the markets have essentially flatlined. And you know, maybe there's some interest rate fears in there too, but I think it's mostly those two. And I think it's kind of a legit.
We still have about 5% in S&P this year. We're still up a little bit on the Dow. I mean, after last year's torrid pace, that's rather remarkable.
Yeah, but you would think, you know, the tax cut was massive to corporations. I mean, you know, they kept in most of the loopholes, and they cut the rate from, what was it, 35 to 21. That is almost.
So is this other stuff what's going to keep a ceiling on stocks, or worse terms?
It could until you see some daylight. Yeah. And you know, the Mueller thing. I mean, you know, who knows what he's got? I mean, that's the problem. It's so uncertain. Right. I mean, yes, the stuff they got Michael Cohen on and Manafort on is extraneous to the Russian investigation. But part of the stuff with Cohen actually does involve the president directly, whether he knew about a payment to somebody, even though it sounds innocuous.
But is that the type of noise that would rattle investors to the point that say, you know, this guy who brought us these tax cuts, lowered these regulations, did all this other stuff, is in trouble, and now we're in trouble? Yeah,
and it shows that if he's kind of dumb enough, not dumb, but reckless enough to tell Michael Cohen to make the payment and not handle it properly, or not do it, probably is the best way to handle that. If he's reckless enough there, with market players saying engage in this stuff, well, who knows what he did with Russians, or who knows what he did in his private business affairs, which Mueller might be looking at. You know, take out the sort of collusion aspect. Mueller could be looking at his very controversial career in real estate.
But you know, that's what I'm thinking. We're so focused on collusion and what was going on. If it ends up, and many an investigation, you know, veers wildly off course, and that this has now come about. And it's following the money and financial transactions that don't involve this.
Yeah, and it's a recklessness. I mean, the Cohen payment to Stormy Daniels and establishing that thing with Susan McDougal, it was very reckless. I mean, first off, it's obvious that it could be a campaign contribution, in-kind campaign contribution. You can make that case pretty easy. The other thing is, did you really have to go there? I mean, you kind of didn't. You know what I'm saying? I mean, after the Access Hollywood tape, I mean, would anybody care that he had a fling with a Playboy playmate a bunch of years ago?
Well, what I want to ask you, though, is follow this through. You know, even if Mueller never gets into this, if the Democrats take the House, they could.
Well, they could just squeeze them and beat them up.
That's what I'm wondering. And yet that does not appear to be coming in the market.
Well, not yet, and we don't know. And I think one of the overhangs is, listen,
which is more of a factor to you? Interest rates moving up, trade concerns, or this thing getting out of control?
I would put trade concerns, this thing, and interest rates as the three in that order, because interest rates, if they move up, it's a sign the economy gets better, and there's positives to higher interest rates, believe it or not, especially marginally higher interest rates, which Powell plans to do. There's not a lot of positives to a trade war.
Right.
And to have the President of the United States, you know, getting bounced around for 2 years if the Democrats control Congress, plus if Mueller really has some stuff, is really not good. And it just creates uncertainty. And let me just make this point, because I talked to investors about this. What they said last night, if he was dumb enough or reckless enough, it's not quite dumb, it's recklessness enough to direct Michael Cohen to make a payment to Susan McDougal or Stormy Daniels to quell it, because you really didn't have to go there. If he's reckless there, he's probably reckless in a lot of other stuff, and who knows what's under the hood. It's just, that's what people are thinking about. So, listen, economy and corporate earnings is always the best thing for the markets. If they go up, people buy stocks generally. These are other factors that get factored into investment decisions.
And markets abhor uncertainty. And right now, they're certain that we won't have uncertainty. They're certain that this will all pass, but they were certain as well that the trade thing would and still might.
Well,
nicely.
I think they're uncertain that it will pass because I think the markets would be higher if we didn't have these two overhangs, particularly trade. I think trade in some ways is much more of an overhang.